Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that is on everyone's mind, building serious wealth in the USA. But we're not just talking about vague ideas, we're laying out a concrete, actionable blueprint for 2026. Whether you're just starting out or looking to supercharge your financial journey, this video is for you. We're going to cover how to save smarter, invest with confidence, and find the right side hustles to accelerate your path to financial freedom. So grab a notebook, because you're going to want to take notes. Let's get started on your 2026 money blueprint. First things first, let's talk about the foundation of all wealth, saving. I know, it's not the most exciting topic, but you can't build a skyscraper on a shaky foundation. In 2026, the old save 10% of your income rule just isn't cutting it for most people who want to get ahead fast. We need a more dynamic approach. I call it aggressive and automated saving. The goal is to aim for a savings rate of 20% to 50% of your post-tax income. Now, before you say that's impossible, hear me out. It starts with a radical budget overhaul. Forget tracking every single coffee. Instead, focus on the big three expenses: housing, transportation, and food. These typically eat up 60 to 70% of the average American's budget. Can you downsize your apartment, house hack by renting out a room, or move to a lower cost of living area? Could you switch to a more fuel-efficient car, rely more on public transport, or even go car-free if you live in a city? For food, mastering meal prep is a game changer. Planning your meals for the week drastically reduces expensive takeout orders and impulse buys at the grocery store. It's about making a few big, intentional changes rather than stressing over 100 small ones. Once you've slashed those big expenses, the next step is automation. This is non-negotiable. Set up automatic transfers from your checking account to your savings account the day you get paid. This is called paying yourself first. If the money never sits in your main account, you won't be tempted to spend it. Treat your savings like any other bill that has to be paid. Start with a percentage that feels slightly uncomfortable but manageable, and try to increase it by 1% every few months. You'll be amazed at how quickly your savings can grow when you're not actively thinking about it. This aggressive, automated strategy is the launchpad for everything else we're about to discuss. Alright, you've got your savings engine running. Now, where do you put that money so it doesn't just sit there losing value to inflation? This brings us to part 2 of our blueprint, investing for 2026. Investing can seem intimidating, but it's the single most powerful tool you have for building long-term wealth. The key is to keep it simple and consistent. For the vast majority of people, the best strategy is to invest in low-cost, broad market index funds or ETFs. Think of funds that track the S&P 500 or the total stock market. Why these? Because instead of trying to pick individual winning stocks, which is incredibly difficult even for professionals, you're buying a small piece of the entire market. You're betting on the long-term growth of the US economy as a whole. History has shown this to be a very reliable bet. Platforms like Vanguard, Fidelity, and Charles Schwab make this incredibly easy. You can open a Roth IRA, which offers tax-free growth and withdrawals in retirement, and set up automatic investments. Just like with your savings, automate your investing. Commit to investing a set amount every single month, regardless of what the market is doing. This is called dollar cost averaging, and it takes the emotion out of investing. You buy more shares when prices are low and fewer when they are high. Over time, it's a powerful way to build wealth steadily and reduce risk. Let us also touch on what the investment landscape might look like in 2026. While no one has a crystal ball, trends like artificial intelligence, renewable energy, and biotechnology will likely continue to be major growth areas. If you have a higher risk tolerance and have already maxed out your retirement accounts, you could consider allocating a small portion, say 5 to 10%, of your portfolio to ETFs that focus on these specific sectors. But remember, your core strategy should always be those broad market index funds. Don't get distracted by hype or try to time the market. The winning formula is time in the market, not timing the market. Start now, stay consistent, and let compound interest work its magic for you. Now for the accelerator pedal on your wealth building journey, the side hustle. While saving and investing are crucial, they are often limited by the size of your primary income. A side hustle breaks through that ceiling. It allows you to generate extra cash that you can pour directly into your savings and investment goals, dramatically speeding up your timeline. In 2026, the gig economy and digital landscape will offer more opportunities than ever before. The key is to find a side hustle that aligns with your skills, interests, and available time. Let's break down some high potential categories. First, digital services. If you have skills in writing, graphic design, video editing, social media management, or web development, platforms like Upwork and Fiverr are gold mines. Businesses are constantly looking for freelancers to help with projects. You can start small, build a portfolio, and eventually command high hourly rates. Second, the creator economy. Maybe you have a passion for a specific hobby, like woodworking, gardening, or vintage fashion. You can start a YouTube channel, a blog, or a TikTok account sharing your knowledge. It takes time to build an audience, but monetization through ads, sponsorships, and affiliate marketing can be incredibly lucrative. Another powerful area is local services. Don't underestimate the power of a good old-fashioned service business. Think mobile car detailing, handyman services, pet sitting, or professional organizing. People are willing to pay for convenience. You can start with minimal investment. Market your services on local social media groups and apps like Nextdoor, and build a solid client base through word of mouth. The best part about a side hustle is the mindset shift it creates. You start seeing opportunities everywhere and develop an entrepreneurial spirit. Even if you only make an extra $500 a month, that's an extra $6,000 a year. Invested wisely, that money can grow into a fortune over time. So, let's put it all together. How do these three pillars, save, invest, and side hustle, create a fast track to wealth? It's all about creating a powerful feedback loop, what I call the wealth flywheel. Here is how it works. You start by aggressively cutting your major expenses and automating your savings. This creates a surplus of cash each month. You take that surplus and you don't just let it sit in a savings account. A portion goes into a high-yield savings account for your emergency fund, and the rest is automatically invested into your low-cost index funds. At the same time, you're dedicating a few hours each week to your side hustle. Every dollar you earn from that side hustle isn't for lifestyle inflation. It's not for new clothes or fancier dinners. It's fuel for the flywheel. That extra income goes directly into your investment account, turbocharging its growth. As your investments grow, they start to generate their own returns through dividends and capital appreciation. This is the magic of compounding. Your money starts making money, and that new money also gets reinvested. You see how it works. Your savings fund your initial investments. Your side hustle dramatically increases the amount you can invest. Your growing investments then start generating their own income, which further accelerates your growth. It's a virtuous cycle. It starts slow, but as the flywheel picks up momentum, the growth becomes exponential. What might have taken 30 years with a traditional save 10% approach can now be achieved in 10 or 15 years. This is how you don't just get rich slowly. You build wealth fast. It requires discipline and focus, but the system itself is simple and incredibly effective. Building wealth isn't just about numbers on a screen. It's about building the life you want. It's about freedom, options, and security. The 2026 blueprint we've discussed today: aggressive saving, simple investing, and a strategic side hustle is your roadmap to achieving that. But a roadmap is useless if you don't start the journey. The single most important step you can take is the first one. So today, I challenge you to take one concrete action. Just one. Maybe it's opening that Roth IRA you've been putting off. Maybe it's calculating your potential savings if you meal prep for just 1 week. Or maybe it's spending 30 minutes brainstorming side hustle ideas that genuinely excite you. Don't get overwhelmed by the big picture. Focus on the next right step. Remember, financial freedom is a marathon, not a sprint, but every step forward counts. You have the knowledge, you have the tools, and you are more than capable of taking control of your financial future. The journey to wealth in 2026 starts right now. Thank you so much for watching. I hope this blueprint gives you the clarity and motivation to get started. If you found this video helpful, please hit that like button and subscribe for more content on building wealth and living life on your own terms. Let me know in the comments which part of this blueprint you're most excited to implement. I read every single one. Until next time, keep building.